Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. Okay, so it's definitely time for an update here on gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical side of this market, then we will move to the order flow, so the commitment of traders, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market that at the moment is approaching a very strong level of resistance. In fact, from here, all this previous move to the downside was created. Again, here the market tested its zone and rejected it to the downside. And at the moment, we have once again reached this area. Now, as we are testing this zone, once again, we could expect some short-term bearish price action, but then a deeper test of the zone. In fact, what usually happens when a market tests such an area, which is a very strong historical structured zone, you expect a little bit of a rejection at the beginning, then a deeper test of the zone, and then a long-term move to the downside. So in a situation like this, we could expect a similar move, short-term bearish price action, then a deeper test, and then longer-term bearish continuation. So first, a rejection of this resistance, a deeper test of it, and then move lower. Going down on the weekly time frame, what we can see is that what that would mean, at least from a weekly perspective, would be first a correction and then the continuation. And that is perfectly in line with the natural movement of the market. In fact, if you have a market which is in an uptrend, you would expect the market to print a series of higher highs and higher lows. So impulses, corrections, and again, impulses. So in a situation like this, since the last move was an impulse, you would expect the correction and then the continuation higher. Now, in general, if you have an impulse and you want to measure the correction, you would have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 0.32 Fibonacci retracement, which is currently lining up exactly at this zone, which we could expect the market to test and then potentially to reject to the upside. Now, if we extend this level to the left, we can see how this is also previous weekly resistance that is now turned support. So we have a confluence of support at this zone that we could definitely expect this market to want to go and test before then getting potentially rejected to the upside. Going down on the daily, what do we see? Now here on the daily time frame, first of all, I did speak about gold couple of times in the past. I spoke about it after this impulse and correction. I made a full breakdown when the market was here, explaining all the reasons for which we wanted to see this move to the upside. Again, I explained why after this impulse we wanted to see first a correction and then more bullish continuation. And again, that is exactly what the market gave us. And by the way, I will link for more free education these previous analysis below in description, so you can go and check them out. Now, in a situation like this, what we can see is that we have an impulse correction. The market tried continuing higher, and it seems, at least at the moment, that it will melt lower. Now, if that will be the case, if the market here will actually create an M pattern, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the market to complete the M pattern at the previous support now turned resistance. So if we actually get this move to the downside, we could then expect some bullish price action for the completion of the M pattern at the neckline. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, we can see how with the last reports, net positions got increased quite a bit. We went from 64k net positions all the way up to 153k net positions with 246k longs currently and 93k shorts. So we went from having 151k shorts all the way down to only 93k shorts. Now, in a situation where institutions are shifting their positioning to the bullish side, more bullish setups could be expected. So if the market actually prints this M pattern, there is a very good probability at that point for a rejection to the upside, because at that point we would also have what we already wanted to see by looking at the monthly and weekly, which is short-term bearish price action, before then having more bullish continuation. So if we do have the creation of this M pattern, how we could be approaching a potential rejection higher. As usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the completion of the M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can get a full refund credited back into your trading account. And if you scroll over here, you will see that there is still time to join before the offer expires and the timer goes to 0 and price goes back to normal. However, spots are limited, so if they get filled before the timer goes to 0, then price will go back to normal. So I really suggest that you take advantage of this directly from here in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.